All right. Thank you, everyone, for your time and interest on this tech talk on transforming treasury through technology. My name is Harsh Darodkar, and I'm an IT business partner to Treasury and Finance. There are two simple objectives that I want to achieve from this session. First is to provide a high level common understanding of treasury business processes at Alexion. And the second is to share an overview of the IT platform that we have built to streamline and automate this business process. So let's start with an inspiration. Our business is a system, like a living body, with the flow and timing that has to function day in and day out. Treasury is the heart in the system with a job to keep an adequate flow of cash to the arms and legs of the organization. It is critical that there are no lapses in this flow when we are trying to develop a new drug or acquire a new company through business development or just trying to continue manufacturing and selling our drugs. So in a nutshell, cash is the lifeblood of any organization. It pumps in and out and has to be protected, has to be monitored. And when this process is not working properly, it can actually threaten the viability and functioning of almost all the organs in the organization. So, what is Alexion Treasury all about? And what are their roles and responsibilities at Alexion? The definition and responsibilities of a typical treasury team actually differs from one organization to another. At Alexion, treasury has four primary objectives: protect, plan, support, and promote. Protect what? Protect our revenues and any fluctuations due to market conditions, assets that are there on the balance sheet, protecting from damages to the tangible or intangible properties, payment defaults from our customers, which is also known as credit risk, and any other risk that is associated to increase or decrease on the interest rates on our borrowings or our investments. Planning includes collaborating with business development team to finance the acquisitions, big ticket capex items, and optimizing the capital structure, which is nothing but a particular combination of debt and equity. Yep. So, and optimizing the capital structure, which is nothing but a particular combination of debt and equity used by a company to finance its overall growth and operations. Treasury also supports various corporate functions such as payroll, taxes, manufacturing, SG&A to pay the bills on time and every time. Last but not least, to promote and build partnerships with banks, financial institutions, and insurance companies. We rely on many banks for our operational or transactional funding requirements in various countries. We work with insurance companies to protect us from damages to tangible property or other type of risk, such as corporate lawsuits or cyber risk. It's Treasury's job to protect and nurture these relationships. So let's take a deeper dive to understand various functions within Alexion Treasury. To start with, cash and liquidity management. Now, to understand the cash management as a function, one has to understand how the cash cycle in the business looks like. So let's start with cash that we use to buy the raw material. As we receive the raw material, we pay our vendors and process the raw material to get the inventory of the finished products. This finished product, or nothing but our drugs, are then sold to our customers, who in turn pay us cash. So That is how an ideal cash cycle, or some may say order to cash cycle, looks like in general. But that's not how it looks like in reality for Alexion. We use a good chunk of this cash or money to pay our bills in SG&A. We pay for capital expenditure, the return on which we don't realize for about 1 to 3 years. We also use this cash for business development purposes, such as an R&D and acquisition purposes, with a lock-in period of anywhere between 3 to 10 years. Our customers also don't pay us immediately when we sell them. They pay us anywhere between 30 to 120 days after we have sold our drugs. In addition to that, because of the nature of our business, and since we are an ultra rare disease company, we actually carry extra inventory of finished goods, finished products for a supply of anywhere between 30 to 180 days. This helps us to avoid the risk of we not being able to fulfill the orders, which can easily or very quickly translate into a life-threatening situation for our patients. On the other hand, what kind of helps us is the fact that we don't also pay our vendors immediately. We pay them after about 30 to 45 days of the actual services or goods that we have received. So there are these big gaps, as you can see in the cash cycle, that needs to be identified, managed, and monitored on a regular basis. And this is what cash management is all about. Just to give you a realistic picture of this function at Alexion, we have about 3,500 customers, 18,000 vendors in 40 plus countries, and we actually pay and receive money in more than 30 currencies out of 120 to 130 bank accounts. Treasury ensures to have sufficient cash balance in the right currency, in the right bank account to pay our partners or vendors at a right point in time. And they do this every day. In fact, multiple times every day by efficiently planning, coordinating with other business functions such as AP, AR, accounting, FP&A, and also, of course, through business process automation. All right, that's about cash management. Let's move to the next treasury function, which is foreign exchange management. So what is a better way to explain a concept than an example? So here in this example, let's assume the foreign exchange rate on 1st January for euro to USD was 1.20, which means if we sold drugs for 10,000 euro, we should expect to receive $12,000 for the same sale. On 30th January, as per the customer payment terms, our customer paid us in full on this day, but the rate for euro to USD was 1 to 1.10, which means we only received $11,000 instead of $12,000 that we were expecting when we actually booked the sales. So we lost about $1,000 in this transaction. Now, what if I tell you that Treasury can negotiate and fix a conversion rate for our future cash flows with our partner banks? In other words, a concept also known as foreign exchange hedging. Let's see how would that scenario play out. So on 2nd January, Treasury negotiates and hedges the euro to USD rate at 1:1.15. So in this case, we should be expecting to receive $11,500 for the 10,000 euros worth of sales that we did. However, on 30th January, we know that the euro to USD rate was 1.10. So we still only received $11,000. But since this revenue was hedged with the bank at a pre-agreed rate, which was 1.15, we only lost about $500 in this transaction. So in a bigger picture, Treasury actually saved $500 through the revenue hedging program. Now, there are many nuances to the scenario. There are many different ways or derivative instruments such as swaps, options, forward contracts, in which treasury and banks actually work together to agree on a conversion rate for future cash flows. But this was the simplest way to explain the foreign exchange management process in Alexion. This is how it looks like when you actually add a reality to the mix. Since 2008, our revenues have actually grown 26 times, and our foreign currency exposure has actually grown 17 times. Equally, the importance and complexity to hedge our foreign exchange exposure or the risk has also increased multifold times. So that's about foreign exchange management or foreign exchange risk management in a nutshell. Let's move to the next Alexion treasury function, which is customer credit management. Okay, so as the name says, a credit risk is a risk of default by our customers. The process starts with a credit request to onboard a new customer. And here Treasury plays an integral role, being part of the credit committee to do the assessment of the new and the existing customers. This assessment factors in many elements into consideration such as financial strength of the customer, local market conditions, and external credit rating agency data that may be available in the market. Based on these factors, the credit committee puts forward a risk mitigation plan along with the amount of credit limit or the number of days of the credit limit for an individual customer. And that's how a customer is onboarded and starts getting a supply of our drugs. So it's a continuous and a dynamic process where Treasury collaborates with local markets, credit rating agency to continue monitoring these credit limits and the terms that were originally set by the credit committee. The takeaway here is, although it's impossible to know exactly who will default on obligations, properly assessing and managing the credit risk can reduce the possibility and the severity of the potential loss and of course future disputes that we may have with the customer. So with that, let's move ahead with the next treasury function. Okay, Alexion has been fortunate to generate significant amount of cash from the operations. Although a large portion of this cash is invested back into operations and for R&D purposes, there is still a decent amount of money that is left for treasury to invest in the market and to generate income on it. This cash can be divided into three buckets. Operational, think of it as your current account. The money in this type of bank accounts are used to make day-to-day operational payments or just to keep the just to run the show itself. Second is transient cash. Think of it as if you want to go to Disney, right, in next 6 months. You are saving money for it. So it's a known outflow in near future. We invest this type of a cash in fixed deposit with multiple banks. And the third, which is patient cash. Now, this is not the cash from our patients, but this is actually the money that we are sitting on while patiently waiting for the next opportunity or a deal. So we don't know the purpose and the application in short term, but we know for sure that we will need it sometime in future. We typically hire a portfolio manager or a portfolio management firm to invest this type of a cash. Now, at Alexion, there are three objectives of the investment philosophy with a very specific priority. Number one, make sure the money is safe. Number two, it's liquid. That is, it is easily accessible. And number three, we get appropriate return on it as per the market norm. So that's investment management at Alexion in a nutshell. Let's move to the next treasury function, which is bank relationship management. Okay, so by now, you know Treasury is responsible for managing cash and the risk associated with that cash to keep the operations going. To fulfill these responsibilities, they need to work with many partner banks and manage relationships with different teams within these banking institutions. From Alexion perspective, we rely on them to ensure our transactions are running smoothly. We have enough money in all the countries that we operate in. We have access to fundings wherever we need it. From banks perspective, they make money on the transactions that we route from them and the money that we actually invest or borrow from them. So in an ideal world, the relationship between the bank and the corporate should be mutual one. But sometimes on one side could be in a stronger position in a relationship. For example, a very large or a big corporate with huge cash surplus might use the banks just as a conduit for the business. So it may have the flexibility to choose between different banking partners. On the other hand, a small company that is strapped for cash could prioritize its banking relationships above other responsibilities, especially if the funding from the banks are absolutely necessary for its survival. So the takeaway here is banks are almost like internal parties to us. We tell them all the news updates about our progress, irrespective of whether they are good or bad, before it reaches to the market, to keep this relationship healthy and transparent so that we can use them when we need them in future. All right, let's move ahead with the last treasury function, which is insurance. So Alexion is a risk taker, willing to invest resources with an exception and hope. But despite our best efforts, there are many things that can go wrong very quickly, which can actually cause economic harm to our business. There are three types of risk that Treasury is managing real time through our insurance program. First is a physical damage to the property due to fire, earthquake, flood, etc. Second is the corporate lawsuit due to patient illness or death. And then the last but not the least one by any means is just the operating risk itself, such as the cyber hack or data leak or workplace accident, etc. So Treasury at Alexion is actively managing and is actively involved in taking steps to minimize the likelihood of things going wrong. It engages with multiple insurance providers to provide to identify this risk and manage them through insurance coverage with the sole purpose to reduce the financial impact. Now, having an insurance policy in place does not necessarily mean that we will be compensated for all the risk events. And that's why it is essential to develop and nurture the relationships with insurance providers to drive the claims. The takeaway here is the better the risk management framework and policy, the lower would be the insurance premium and the risk itself. All right, moving ahead. Let's talk about the technology landscape. Now, you know what Treasury at Alexion is all about at a high level. You learned about their primary goals and objectives. I'm going to talk about the IT infrastructure that we built to support these objectives. We refer this IT infrastructure as a treasury management system. So I'm going to break this into two portions: before treasury management system and after treasury management system. So on the left hand side, which is before TMS, which is treasury management system, we were using SAP, Bloomberg, Finis, and lots of Excel files. We were constantly spinning our wheels to execute the business transaction, to update and reconcile them with internal parties such as accounting, and also external counterparties such as the banks. And every time when there was a change in the existing uh, transaction, or there was a new type of a transaction, such as a new foreign exchange hedging instrument, we would actually start from the scratch. So there was a lot of manual and clunky business processes earlier. Now, without spending too much time into this, let me talk about what's the end state now. What did we build? So We are still a SAP shop. That means we record all our AP, AR, and cash transactions in SAP. We are using Fire apps to analyze our foreign exchange risk exposure and propose the amount of foreign exchange hedges or hedge transactions. These proposed hedges are electronically sent over from Fire apps to FXall, and they actually go through an online bidding process here. In this process, the bank that gives us the best rate actually wins the bid, and the FX hedges are then booked with that particular bank as a counterparty. Upon successful execution and confirmation, a real-time connection is used to send these confirmed trades into Chatham, another SaaS solution for technical accounting and reporting purposes. And as a last step, these confirmed FX hedge transactions are also then sent to Kariba for updating real-time cash position and also for payments and settlement purposes. We use Bloomberg data feed to keep the market data, such as the daily rates, daily foreign exchange rates, consistent across all these applications. We are not only using Kariba for foreign exchange hedge transactions, but we are also using them for recording our loans and making payments for the treasury transactions. Now, in order to support our investments and term deposits, we have recently started using ICD and 360T as our solution provider. Now, up until now, whatever I described was about how these applications talk to each other in one or a clockwise direction. However, these applications also talk to each other in reverse or many other directions as well. So for example, Fire apps receives confirmed FX transactions from Kariba for updating the FX exposure analysis datasets. Kariba also receives the AP, AR, and cash data from SAP for building the daily cash position. So it's a hybrid scalable solution that we have literally stitched together to streamline and automate the business transactions. For those of us who are like me, who are more interested in details, here is how it looks like from a data workflow perspective. Now, I'm not going to talk into a lot of details here, but we are using many technologies on the back end, such as standard out-of-the-box APIs from the applications, SAP PI, which is our middleware solution, FTP, SFTP communication protocols, various XML file formats, etc. My take on this infrastructure is it is complex yet simple in nature. It is simultaneous yet independent in nature. If you compare the total cost of ownership, it's way more economical operationally in nature, given we have been able to automate majority of our business processes and reduce manual efforts and omissions. It is because of these industry standard or industry best athletes, we have been able to truly automate, integrate, and really elevate the user experience across various treasury and finance functions. And I'm very happy to share again that we were recognized externally earlier this year for this IT infrastructure by Treasury Management Association of New York, which is part of AFP. We actually won the first prize, beating companies like WeWork and Cigna. Here, I want to give a big shout out to the entire Treasury team, especially Stacy, Jeff, and Prasanna for collaborative partnership that we have had, and also for their support and patience that they have shown during the project. Thank you again. All right, let's move ahead. So let's talk about how does the success looks like today. How did we flex our innovative muscle? We built an integrated, smart, and efficient treasury workstation that can now reap the benefits. So with this platform, we built a treasury dashboard that can be launched with just few clicks. It includes tons of useful information such as the interest income or expenses, our loan balances, or a monthly snapshot of our hedge transactions. The whole process used to take about a day for Treasury, and now it just takes 15 minutes each morning. We were also able to incorporate accounts payable and accounts receivable data for all our 50 business units across for next 10 weeks. That has led to basically be more informed and proactive funding and investment decisions. With this infrastructure, Treasury is now able to analyze and negotiate the bank fees with our partner banks. They are expecting to save about 10% on the bank fees starting this year. With the enhanced visibility of cash, Treasury can minimize operational cash left in countries where it gained no return. With the onboarding of some of the applications that I was talking about, such as ICD or 360T, they are now able to identify and make investment decisions accurately and more quickly. Post TMS implementation, they are able to leave only about 10% of our cash uninvested across all these countries that we have been monitoring. And last but not least, this platform has been super useful to help and identify the actual cash drivers or the drivers of our cash movement at Alexion, which was one of the biggest pain point for Treasury over years. All right, these are just some of the biggest or bigger achievements from this infrastructure from a business perspective. Let me talk about the project KPIs from an IT perspective. So we wanted the solution to be always available for everyone across all locations with a guaranteed uptime of more than 98%. Since majority of these apps are SaaS in nature, we were able to reduce the cost of periodic updates and minimize the internal IT support by more than 50%. Now, we are a remote friendly company and our businesses are located at multiple locations. So this infrastructure has immensely helped our business teams to continue to work at a remote location, especially given COVID. In Treasury, we kind of knew that one size does not fit all. In other words, one application cannot really cater to all the business requirements. But we were not only able to address all the business requirements, but this infrastructure is now playing a major role for our finance team to think more strategic and less operational in nature. Because these SaaS solutions are with a built-in single sign-on functionality and with their own SOC 1 and SOC 2 reporting, we were able to also offload a lot of cyber risk that is typically associated to Treasury functions, thereby strengthening our security posture. I must say that we are in a much better position to budget and plan for our resources because we know the OPEX that we may have to spend for next couple of months or years. So just trying to avoid any surprises there. And last but not least, with this infrastructure, we were also able to secure a built-in disaster recovery mechanism, further adding to our business continuity planning. Okay, here is what I want to summarize. Given COVID and so many macro and microeconomic conditions, our future is shaping in real time. And that's why we need to continue to focus on these mission critical functions that I talked about today so that we can continue to deliver to our patients today and tomorrow. So with that, I'll stop here and we'll be happy to take any questions. We have some members from our treasury team joining us today as well.